University. I'm going to turn it over to you right now, sir.
Great, thank you very much. I'm also the Regional Director for the Small Business Development Center, which is funded jointly by the state of Texas and the Small Business Administration, where we help lots of small businesses with business plans, financing, market research at no cost. My background prior to doing this is I've run and launched several entrepreneurship and innovation centers, both here in Texas and in South Carolina. I'm a serial entrepreneur and a former aerospace executive.
I like that, serial entrepreneur. I'm John Hinton. I'm the president of Plains Capital Bank here in Weatherford, the local branch. We are a large regional bank based throughout Texas, based out of Dallas. Been in banking for 33 years, started my career, I went to Texas Tech. I've been across Texas in Midland and Dallas, and now back to Weatherford. Been here for 24 years, and great community, great place to live. I have a wife, 2 kids, both graduated from Weatherford, very successful. My daughter graduated from Weatherford College and has done very well in the OT from the OT department, and so just love Weatherford and happy to be here.
Hi, I'm Linda Williams. Excuse me, I'm with the U.S. Small Business Administration. I'm out of our district office, which is it's actually near the DFW airport. I help businesses through city governments and also chambers, and also I do a lot of trainings, and our office handles a lot of questions that come our way. But we help in the way of lending through lending programs that are actually administered by the banks, and unless it's in the case of a disaster. We also help with government contracting, and we also, like I said, we help work with people that just can't find their way through the many resources that we've got, such as the SBDCs. We routinely put them in touch with Charles and his team, and stand ready to help in a number of ways. So I will pass this on to my company.
My name is Matt Authier. My claim to fame in Weatherford is that my uncle is your sheriff, Parker County Sheriff, and my Aunt Linda, who surprised me by being here today. We have a deer lease in Grayford, so we come through Weatherford at least once a month. It is a special place. And listening to the panel before us, particularly Weatherford ISD folks, you should be very proud of what's going on here. I feel like in Waxahachie, we've kind of experienced over the last 10 years what you guys are about to experience. For a living, I work at Gateway First Bank or Gateway Mortgage. Based out of Waxahachie, we do loans all over the state of Texas, primarily residential, single-family loans and investment properties. And I've also recently, in the last 2 years, spent the better part of the last decade teaching personal financial literacy in any school district that will welcome me. And so I've been doing that, and about 2 years ago, kind of on the small business front, I started a small business on the side to be able to go in not just Waxahachie ISD and those surrounding campuses, but all over the state of Texas. So hopefully I'll be able to speak to a little bit of the small business side, but also to the personal finance and how that affects us and our children.
And I am not his Aunt Linda, just want you to know.
All right, well, what we're going to do is I've got some questions and I'm going to leave them up to the panelists to look at each other and decide who wants to take it, and if the second one wants to chime in, we're welcome to it. First question out of the box are, what are key factors to a successful business owner bank relationship?
It's off. You can turn it on.
Well, I think
Turn it on first.
I'm sorry.
I think number one, he said relationship, is have a relationship with your banker. Know your banker on a personal level. You need to have his phone number where you can call him. And I give my phone number to my customers. They have my cell number. They call me 24/7. They call me on the weekends. If they need something, you need a banker that's available to you. So the relationship is the key to that. As far as other success points, there's so many of those that you can go through, but the one thing that I would stress is know your business, know how to read a financial statement. that's the number one thing I see with small businesses and when they're not successful is they go into business, but they don't know how to look at a financial statement. They don't know what a balance sheet is. They think a P&L, they don't know that a P&L is the same thing as an income statement. It's these little things, and I'm sure Matt sees this too when you look at financial literacy. You know, a balance sheet and an income statement work together. They're not two separate things. And so the training that you know, find that training that you need to really be able to look at your business and see what's happening through your financial statement. The Small Business Development Center is a great resource to that. They can help you put together your plans, your cash flow. They can help you to put together your pro forma statements, so everything that you need.
Yeah, I can kind of speak to this on more of the relationship with your banker. And again, I'm not necessarily doing small business loans, but we do a lot of loans for people that own their own business. And that's a totally different process that you go through to apply for a mortgage when you own your own business versus having a W-2 through an employer. And so we even teach our kids starting in 10th, 11th grade through some of those CTE classes that were mentioned earlier about how to file a self-employed tax return, how to keep track of your expenses, whether you have truck and equipment, or whether you're tracking miles, that kind of stuff, taking clients out to eat, those kind of things, and why that's important. The small business owners are sometimes our most difficult because if you start a small business and you're wanting to try to start your family and buy your first house at the same time, most of the time that doesn't happen, and that's where we refer people to smaller banks or more local regional banks that can have a little bit more flexibility. Unfortunately, in my business, we kind of operate under the rules of Fannie Mae and Freddie Mac, and so if you're a small business owner, you've got to have at least 2 years of tax returns before you can apply for a mortgage if you're going to apply through Fannie Mae, Freddie Mac. And so a lot of that is counseling those young people that are going into the workforce right out of high school and not going in to get a W-2 profession, that you may not be able to buy a house for 2 years. You're going to have to show, and number two, don't write off all your income. Because a lot of times we have to use that net income to qualify and to use that as qualifying income. So if you don't have a spouse or a partner that's bringing W-2 income that's a little bit more stable and routine, it might be a real challenge for small business owners to apply for their first mortgage.
I had to agree about the relationship, and it's not something to think about setting up a relationship until you're out of money and then you need some help. It happens every day. I had a call yesterday from someone calling the office. One of their clients had said, hey, we can only pay you every 90 days now, and left with, she had 9 different projects going on, and she was desperate. I gave her some resources, but that's not the time to do it. It's time to think ahead of time. You're going to set up a bank account somewhere, you should, in the name of your business, and a credit card, and you, preferable, try to make that a place where you can actually set up a relationship from the beginning. This is incredible that I just heard that you can call this gentleman here and he's going to help you. And I know that we're in the age of a lot of online banking and all of this. Think about that though. You're in a room with a few bankers. I know Federal Reserve is out there. But make contact, introduce yourself, have a plan, have a business plan that's ready to go, that talks about finances. And if you don't have 2 years under your belt, there are some lenders that will talk to you about that and help you build your credit situation.
All right, well, we've talked about some things that aren't titled question. I'm just going to talk about business plan. We've already certainly talked about how that's important for you. But what I'm going to ask now is, can you explain the different types of financing options available for small businesses and the pros and cons with each?
Well, I think the number one thing that we see that a small business needs are lines of credit. That's typically what we see when a business comes in. We do partner new businesses that come in. We do partner with the Small Business Development, the SBA, the Small Business Administration, and they help they're a help for startup businesses or businesses that don't have all the criteria that a bank may need for conventional financing. That's where we lean on the SBA, and they are a very good resource for small business owners. Matt, I'll let you.
Yeah, you go fill it.
Well, I'll just vouch for that I do think about SBA. SBA lender don't have to make SBA loans, but it's good when they think about SBA and you're working with a lender that will think about, well, maybe with that guaranteed loan program, I'm a little more protected as a bank. Let me do what I need to do to get you into something like that. So that was an amazing statement that you made, and I'll vouch that is an SBA lender.
It goes this way. That's my mic.
And I'll switch mics. And again, I'll speak. I told Charles when he gave me a preview of the questions about 10 minutes ago, I was like, I'm not going to be able to speak a whole lot to the SBA side of things, but I'll try to bring it to a little bit more personal that we all experience. And that's loan options just as an individual providing, a mortgage for you. And a lot of times we partner with banks like these folks. If somebody's looking for a 20-acre lot that they want to build on that we might not be able to finance. And so one thing that I did mention in the first question is when I was coming up in the business in 2015, we did 9 out of 10, if not 10 out of 10 loan apps face-to-face. That was the preferred way, especially for we're kind of a regional or small local bank. They were encouraging us to get the client in the room. Most of our clients live within about 20 square miles of where our office is. And after 2021 and COVID, I would say 7 or 8 out of 10 are now online. We're only seeing people 1 or 2 times out of 10 that come into the office. Our success rate when we're only dealing with someone via email or text message or a phone call is very low. When we are able to get them face to face and be able to kind of build that relationship, ask about their kids, see them at HEB or wherever we might shop, our kids go to the same school, the football games, we're going to have a higher rate of that. So I always tell people, I encourage them to really try to meet your banker, your lender. It's one of the largest decisions that you'll ever make, whether it's your individual mortgage or a small business loan through a banker. The most important thing you can do is to create that relationship with them. If your banker knows you, and I know John can speak to this, if your banker knows you, they're going to go, they're going to fight for you when they're sitting around the table with their bosses trying to get that loan approved.
All right. Well, I want to talk a little bit. If anybody want to address and talk about it, there are several types of SBA loans. There's now a line of credit for businesses, and there's a 7 and a 504. Can anyone
That's right.
address that?
There's one or two. There are micro lenders, and they have loans up to $50,000 with the SBA micro lender program, but they also have our Community Advantage program. They can talk to you about 504, and they can talk to you about 7A loans as well. So the sky's the limit. We covered just about everything, but the goal is to get a loan for your business. If you can get it without even being an SBA loan, go for it. That's the way to go. And to deal with the lender if they can't help you, I call it playing the sandbox, Will, where they can refer you somewhere that can help you. And I think both of these gentlemen do. You're in the mortgage business, but I think you would help someone. You would help refer somewhere else to someone that might be able to help too.
And back to the SBA, Plains Capital is a preferred lender. That means that when you come to the bank, we have expedited processes because we are preferred by the SBA. It's still a process. It's still not an easy process. There's still a lot of paperwork that's involved because it is a governmental entity. But we have programs in place. I talked to lines of credit earlier. Right now, we have a line of credit up to $100,000, and there's certain criteria that you can meet, that you have to meet. But that can be funded in a very short time. It's maybe a 3 to 4 day turnaround. So those have been very beneficial to our small business owners that need working capital in a very fast manner.
All right, I've got a softball tip for you guys. What are the common mistakes small businesses make during the loan application process that they should avoid?
I think this is what I hear from the lenders, and we hear about it in our office too, that they'll go in and they'll think it's like a consumer loan. It's a whole different ballgame. They'll come in and they'll go, well, I think I want to do this. How much do you have? You go, what do you need? And what do you need it for? And the business owner goes, well, what do you have? What can you lend? And it's just not the way it goes. And I'll let John speak to how it really goes.
Well, the one thing, we're going to look at the 3 C's of credit: character, capacity, and collateral or capital. So number 1 is character. We're going to look at your credit score. Know your credit score. Know your credit history. Because if you don't have good credit history, it's going to be really hard to get a loan. And then we're going to look at your capacity. What's your ability to repay? And we look at not only the primary source of repayment, we're going to look at secondary sources of repayment, which goes back to your collateral. What do you have? If this doesn't work, what's the bank going to fall on to get repaid? So the 3 C's of credit are really important. And I'm going to throw this out there to parents. Help your kids establish their credit. If you don't have credit, you don't go very far in this world or in this life. And if you want to go to a bank or you want to buy a car, help your kids establish credit. When they're in high school, don't pay cash for a car for them. Put them on the note with you. That's going to go to their social security number, and it's going to establish their credit. So when they do walk into a bank, they're going to have established credit. And that's the number 1 thing we're going to look at.
I feel like this is where I get to tag in. So about 8 years ago, I was on the school board in Waxahachie ISD, and it was the same time I changed careers from Deloitte Touche auditing and tax work to Gateway Mortgage, which was mortgage banking. And my first year on the school board, I would also have 21, 22-year-olds come in to try to qualify to buy their first home, and they had no clue. Credit score, what it meant, why it mattered, what an interest rate was, the components of your monthly payment, taxes, insurance, etc. So I asked our superintendent at the time if I could get in front of every high school senior before they graduate. At that time it was about 700, now we've got about 1,100 high school seniors. And over time I started to kind of feel guilty that we were getting to them too late. That high school seniors, these kids, most of them are already 18 and may have already made some of these decisions or bad decisions. But those 21 to 25-year-olds that come into my office to apply for residential mortgage, the mistakes they made between 18 and 22-ish is usually what sets the tone for their interest rate and how they're going to experience that financing situation. So over the last 7 years, after I realized, 12th grade, we still do that, but it's a little bit too late, we started going all the way to 3rd grade. And we start, every presentation that I do, I start with a loan simulation. It could be for a small business loan. I kind of tailor it towards a residential mortgage loan. And we talk about what's your job history, what is your career, how much do you make per year, what is gross versus net income, what are taxes, and we look up their family's property taxes and see how expensive they are. And then the last thing we get to is credit. I ask them just blankly, and I tell people, if you know what kind of the right answer is, don't say anything. I want to hear what your genuine answer is. I've heard answers like their credit score was 12, their credit score was 220, and then you'll have some, even high school seniors that say single-digit numbers on credit scores. These are folks that are eligible most of the time for a credit card. And so my challenge, especially when we did this event in Corsicana, and anytime I get a bunch of young or professionals that work locally in a room, is that you guys have the skill set to be able to partner with the local school district to be able to go in as often as you can. I think I got in front of, I wrote it down yesterday, about 3,600 students last year. And this is just kind of a side deal for me. And if you have the ability to partner with Weatherford or a local school district, I promise you, if you say, I'll come speak to a class for an hour, they will put you to work. And there is no better impact. We do a lot of great work in the public school. You'll find no bigger public school advocate than me sitting in this chair right now. My wife's the principal. All 3 of our boys are in Waxahachie ISD. But those kids, when they see an outsider or a professional come into the room and bring their curriculum to life, they will carry that with them until they're 18, 19 years old, and they'll remember that a good credit score is 740 and above. They'll remember that the interest rate is tied to your credit score. The monthly payment that you make can drastically be impacted by one 30-day late payment. I've got kids that have graduated 5, 6 years ago that still come back to me. Some have come back for their first mortgage loan, and they said, I remember when you came to our high school and spoke to us about this stuff. And it's not fancy. I don't dress it up and make it super complicated. But you guys, especially those in this room that are tied to the chamber, to the city, y'all have the skill set that our young people are desperate for. The teachers do an amazing job teaching this stuff, but it's very hard because financial literacy, there's an average of about 2 questions on every state test related to personal financial literacy. And when we are kind of encouraging our teachers at the state level to teach towards that test through an A through F rating, they're going to teach those things and try to make sure their kids are really good at those things. So financial literacy oftentimes gets left out. And that's where I think the professional community, the business community, can really come in and come alongside our school districts to help it that way. Our kids will benefit in a great deal if we can do that.
I'm glad you mentioned financial literacy. It applies to businesses as well. And we happen to be piloting a 3-hour educational webinar. We're doing one today, 2 next week. We're doing this part of nationally for SBA. It's not available anywhere else, but if you want to sign up for it, it's free. If you'll go to our webpage at sba.gov/TX/Dallas, sign up for it. It's absolutely free, and it'll go. There's a whole section on financial literacy for businesses. So I had to make that plug.
All right. Well, thank you for that. And I'm glad we talked about the personal side of how that affects you as a business owner, especially if you're a young business under 2 years in business. Personal credit score is key to getting any kind of financial program through the banks. This is open to everybody here. The question is, how have recent economic changes or trends impacted the availability of funding for small businesses?
That's a really good one. I have to say that this area does kind of leads the nation. We're, I think we're number 5 in small business loans. I think if anything, I think it may impact other parts of the country even more than Texas. But it has to do with credit and also interest rates. I think that controls how much money is out there, and that leads me back to John. I'm sure you have something to say about that.
Well, interest rates for sure. And we hope to see those come down in the next couple of weeks with the Fed meeting, and you know, I think that will have an impact on what we see in the environment, in the economic environment. You know, the cost of funds right now is very high. You know, the prime rate is at 8.5, and that's the highest we've seen. I've been in banking 33 years. I think the highest I've seen prime has been around 10. So we're at that high. You know, during the pandemic, we saw rates go down to the 3% area. You know, it's an anomaly. We'll never see that again, and if we do, we're going to be in another world of hurt. We hope we don't ever see that again. But if we can normalize rates and kind of, the Fed funds rate is at 5.25. That's really what the Fed prices, the bank prices their loans off of that rate. You know, we'll see that go down hopefully 1/4, maybe 1/2 in September. And that makes your rate on the bank side come down as well, and just makes loans more affordable. So the economic environment is huge. Is a huge factor in what we look at. You know, we take in your deposits, we loan those out, we make a margin on those, and that's how the bank makes money. We base our rates or our lending rates off of that margin, so that we make money. So as those rates come down, everybody benefits. The bank's going to benefit. You're going to be able to afford maybe more loan than you could with rates where they are now, or maybe you're going to come in and get a loan, because a lot of people are sitting on the sidelines now, waiting for rates to come down. I would encourage you not to do that. You know, if it makes sense, we can always help you work through that process and looking at what you can afford and what you can't. But hopefully we'll see that situation. There's a lot of factors that go into it with the election coming up and everything happening. So we hope to see those rates come down in the next 12 months.
Yeah, and again, from the personal side of things, you know, at Gateway, we've been over 6% on a 30-year fix for over 2 years now. And we went through about a 1.5 to 2 year period where most of y'all in the room, hopefully, if you had a mortgage, were able to refinance at 3 or lower on a 30-year fix. There were some people went from a 30 to a 15 because the rate was so low. Now, over the last 12 to 18 months, it's been brutal for my industry, residential home loans, just because those people that would either move sideways to change geographic areas, either for a school district or whatever it might be closer to work, or to move up because their family's growing aren't able to do that. I do a lot of teacher loans, first-time home buyer loans. If you have a single income right now that's below $70,000, more than likely you're not going to qualify for a home $300,000, $350,000. In Ellis County, where I do most of my business, average home prices are between $350,000 and $400,000. I tell my students when I go talk to them, I bought my first house, we built it for $142,000 in 2010. Interest rate was about 5.25%. My dad always says, and there was a couple that said it while we were talking, my first interest rate was 17% in 1986, the year I was born. I said, Dad, but you paid $65,000 for that house. These people are paying $300,000, $400,000, $500,000 for their starter homes, and interest rates, for the last year have been somewhere between 7% and 8%. And so while we're seeing them come down, we're doing the rain dance outside, hoping that these rates come down to kind of something normal in the 5 to 5.5 range in the next 6 to 12 months, because the American dream of homeownership has drastically changed over the last 2 years. It's just become the incomes every month, or the gross incomes or annual incomes, have not kept up with the cost of housing and even rent. Some of y'all, if you have a 2% mortgage on a house and you're looking to move and can afford it without selling it, you're probably going to turn that into a rental house. Because right now you can't really make a rental cash flow at 7, 8, 9%. And so a lot of these people that are homeowners are now going to become investment property owners as soon as they look to move for the next time.
I think John made a really good statement about don't wait. And you should never wait till you really absolutely have to have that loan. But the 7A program is predominantly, it can be fixed rate, but predominantly it has been variable rate in the past. So if you jumped in now, that doesn't mean necessarily that you're tied to that rate forever. If they're coming down, that's great. If you need money and you don't have it, that's serious. So I liked what you said about don't wait.
Okay. Do you offer any education programs or workshops for small business owners? If so, what topics do they cover?
I kind of jumped ahead online, so I'm going to let them take this.
Well, we refer, we don't actually offer. I mean, we offer counseling when you come into the bank, and we look at your financials, your business plan, and that kind of thing. But if you need financial literacy, we would refer you to Weatherford College. The Chamber has some classes. Weatherford Chamber has some classes. The Small Business Development Center is certainly a great resource for that as well.
Okay, then I'll make the plug again. It's sba.gov/TX/Dallas. It's a 3-hour webinar. We hope you'll stay on from the beginning to the end, but I can guarantee you're going to get some financial literacy at the very beginning of that. And one is going on today. There'll be two more going on next week. And we hope you'll join us and let us know what you think about it, because that's going to be the model for a national program coming out.
Yeah, and I would just say, even as a residential mortgage maker, I've sent 10, 15 people to the SBA office inside of Navarre College, which is in Navarre County, and also they have a branch in Ellis County where the SBA is located. And when they come into me with either having never filed a business tax return, or during COVID we had to collect P&Ls because incomes were drastically different. And so bank statement loans, those kind of things were very popular during that time. And so kind of the moral of the story is use the resources that are available. I remember going to this exact conference in Corsicana last year, and having just started my own business for financial literacy, having no clue what was available to me and how many people were willing to sit down and kind of counsel me through these hard decisions. So just whether it's personal finance or business finance, there are tons of people and resources available to you in your area to utilize. I would strongly encourage you to lean on those.
Okay, well, SBC does do workshops as well, and we will be shortly doing some workshops here with the Weatherford Chamber. We have 3 on the books right now. One is building a budget. Another one is SWOT analysis, because you've got to look at your own business and your strengths and your weaknesses and potential threats and opportunities out there. And third one, I can't even remember the third one, but we got a series of 3 going on right now through the chamber and through other chambers as well, so that we are working to have these out and available to the members. and our community to help have the financial literacy and ability to gain the financing that you need. Next question. There are future trends and changes coming to see in the landscape of small businesses and lending, and how are you preparing for these changes?
Say that again.
Yes, said that again.
What future trends or changes do you foresee in the landscape of small business financing, and how are the local lenders preparing for these changes?
Deep question. That's a tough one.
That is a tough one. You know, bank lending it changes based on regulation, a lot of it, but it's been the same. I mean, you don't see a lot of change unless in the 33 years that I've been doing it. You know, we offer the same products, we offer the same, interest rates change with the Fed. So, you know, we offer all the products that you need: equipment financing, lines of credit, real estate financing. It's all there. I don't really know how it's changing, other than with regulation and what the Fed and how the banks are regulated.
Our biggest change that we felt is, again, that face-to-face to online. I can't stand the text message, and I'm kind of an old soul in a 38-year-old body, but I can't stand the text messaging and email, when a client will not come meet me. And I've driven 2-3 hours to meet a client. But even on the small business, I would assume you guys do a lot more in person than we do. But I've probably closed 7 or 8 loans in the last 2 months where I've never met the person. And we try to go to all of our closings in person to meet them, to give them a little thank you card. In those 7 or 8, you know, they may never know my name again or phone number. They have only saved it as a text message. And so the speed at which we're required as bankers now to respond is incredible. You said, you know, you work 24/7, same. I've had to leave kids' games. I've had to walk away from coaching on the sideline to answer a call or to get back to somebody that's looking at a house and they need to make an offer right now. The speed at which we have to respond is incredible. By the time we pulled somebody's credit, within about 6 hours, they've received calls, texts, and emails from 20 or more banks that are all big online banks that have access to credit bureau information that's being sold. And so we have to be super tight. I would say as a consumer, it's helped because it keeps us super tight on our fees and our interest rates. We're not able to deviate 1/4%, 0.5%, because in the old days where you had to go physically to another bank, take 2 or 3 hours to fill out a loan app, get a loan estimate back, they can do that in a matter of minutes now. And so our feedback to our corporate office has been, guys, y'all got to get as lean as you can on these fees and rates, because we're being shopped as often as we've ever been shopped before because of how easy it is to apply for those loans and get returns back.
I just say this, I agree with you on the online situation. I think that's probably the most dramatic change that we've had, and it's coming. There's going to be more of it. There are good players out there, and there are very, very bad players out there. It would be good to get your feet wet just to see what's out there. Be very, very careful online. But we do have on our website a lender match tool where you put your information out, and lenders, they may be online banks, they're SBA lenders, they may be brick and mortar banks, but they're SBA banks. It's pretty rigorous to go through the process to be an SBA lender and to know what you have to do. This is a preferred lender. That means that they're really taking on the risk that they're doing the loan exactly right. But check that out. You'll see all kinds of lenders on there. The best place to go for a loan is this what we say, this is what I say, is a bank where they know you. And so now's the time to start setting up relationships. If you're thinking about, what's out there for online, check it out. But I would use our lender match tool because it's not geared like the others. So there are a lot of online ads that you get later, don't you? Just being out there on the web.
It's brutal. And I just wanted to speak to that. We had our first summer financial literacy summer camp this summer. We had 54 students, 5th through 12th attend. 44 of the 54 had never stepped inside a bank. So only 10 students, whether they were 9th grade or 12th grade or 5th grade, had never physically gone. They'd gone through the drive-through and saw the tube go up and all that, had never physically been inside of a bank. And I think that's an important sign.
By the way,
Aye.
the number one reason that small businesses fail is capital. 70% of the businesses have never been into a bank task for a commercial loan. So,
Okay. We got a question in the back.
Yes, thank you. Thank you for making it. Andrew Machado. I have a quick question, since we have letters here on the panel. This is sort of a three-pronged question. The first one is really, what sort of criteria, what ratios are you really looking at in the underwriting process? The second one, really, it has to do with what is the weight, right, if arbitrarily, that you have to put on the individual, the pro forma, and sort of the business plan. And I'll just leave those two. That should pretty much cover everything.
That's a John question.
What was that? Say that. I was trying to process your second part of the question.
So the first question really is,
Oh,
what is that criteria you're looking for, right? Like what ratios are you really focused?
Yeah.
If you look at the whole picture, I understand, but what are those ratios you're really looking for?
really, the main focus for us is we look at your cash flow. We're going to look at your DSCR, your debt service coverage ratio. That's a big ratio that we look at, is how much debt, how much your payments are to your income. We like to see that. It varies by industry, the minimum typically being 1.2 times. So your income needs to cover your debt service by 1.2 times. It goes up from there depending on the industry. But that's a big one we look at. We look at your debt to worth. We like for your debt to worth to be less than 4 to 1. It varies by industry as well. But that's kind of the max. It can go above that depending on other factors, cash flow. But back to we also look at the guarantor or the owner of the company. We're going to require you to, if you're an owner of the company, we're going to require you to guarantee that loan. That's another source of repayment. So we're going to look at you personally. What kind of assets do you have? What kind of cash do you have? So if the business doesn't make it, or if it's not making it, how can you step in and make that business successful? A big part, home equity. If you have a lot of equity tied up in your home, you can, and Matt can speak to this, you can pull that equity out and help that business or get you through some tough times. So we're going to look at the guarantor, and it goes back to your credit. If you don't have good credit, we're not going to probably be able to entertain a loan, because we're going to look at the guarantor or the owner of that business first.
Yeah, we have a ton of people, especially when rates were 3%, that were accessing equity in their homes. In general, from 2010 to 2020-ish, home values were going up about 8 or 10% a year. And so a lot of people that have been sitting at home for a decade had built up a ton of equity. And so you had some teachers or other professions that might be going out and doing their own business, and they were accessing their home equity to do that. On our side, we look for a ratio of about 45% gross income over any debt that's reporting on your credit report. FHA, VA loans can go a little bit over 50, but for conventional loans, we're looking at about 45% on the debt ratio. And a lot of people get confused. You said credit score, and it is the most important thing. That's why when I'm teaching kids, I wait to the end and then I show them a scale of why it matters and what real scores are. But it's the number one thing. It's what the determining factor is for your interest rate. And so we use that a ton. Like most people think, I've got a AT&T payment or I've got a utility bill. And while you can report some of those, especially if y'all got some 18 or 19-year-olds that are in college and paying bills on their own, they can self-report that information, those payments, to the credit bureau. And if they don't have a credit card or you don't feel like that's the right option for them, they can start earning credit through those utility bill payments that they're making right off the bat. And so when we look at debt ratio, we're looking at your gross monthly income divided by any debt that's reported on your credit score. The number one thing credit related when people come to my office is they'll show me their Credit Karma app. I've seen Credit Karma be 120 points off from what a true FICO, a mortgage. And I tell people, if you think you're going to buy a home in the next 6 months, let the lender pull your credit. Rip the Band-Aid off, know exactly what you're dealing with. A lot of them are just getting married and they kind of want to hide some bad decisions that they may have made years ago from their spouse. I say rip the Band-Aid off. A lot of spouses find out what their other spouse paid for their wedding ring when they look at a credit report. So you see everything. There is nothing you can hide when I pull your credit report. And I tell them that. The number one pitfall was one of the questions of how people kind of screw up financing. On our side, it's financing the furniture before you close on the house. If you don't tell me that you're going out and accessing another line of credit, I'm going to get a ding. Our underwriter's getting a notice every time your Social Security number is pulled with the credit bureau up until the day that you sign the documents and become owner of that home. So that's easily the biggest downfall of doing that. And then just, it's okay for your kids to kind of know Credit Karma. A lot of our credit cards report credit scores if we log into the app. But if you're truly doing something serious on financing, whether it's business financing or your mortgage, rip the Band-Aid off. Make it a process with your family to sit down and run there. If you've got 18-year-old kids or higher, make it a process to sit down with them once a year or twice a year and look at their real credit report. If they're doing things right, it's not going to hurt them to have that report run once or twice a year. But that's the way you can avoid a lot of pitfalls. If you come into my office with a 580 credit score and you're not a veteran, you may take 3 to 6, sometimes a year to get that score up to 620 or above to where we can qualify you for a mortgage.
I'm going to answer a very small part of that question or address it. I believe you were asking how much of it is your personal credit, how much is it, your business credit and all that. Business credit doesn't matter. In the beginning, all that you have is your personal. So all of the focus has been on your personal credit score. But as you're in business, you start to build your business credit, and you get a D&B rating. There are a lot of different kinds of ratings. The ones that we use at SBA as we were doing disaster loans is the paydex score. How long does it take you to pay your vendors? So as you're starting out in business, number one, get a D&B account so they can start tracking your business credit. But don't sit there on those invoices saying, oh, it's only 1% if I go past 20 days. That's a pretty good loan. That's not a good loan. That's compounded, I think, almost hourly. I'm exaggerating, but it's quite compounded, and that's not an annual rate. And why not pay your debts when they're due? But that's how you're going to be judged, is how long it takes you to pay your vendors. So be sure to build that and make it strong from the beginning. You have a chance to start at zero and build. Would you agree with that, John? Well, I've been validated, so that's what I tell people anyway.
All right. Okay, now I'm going to say, in what ways do local banks and financial institutions contribute to economic growth of the community through their support of small businesses?
Well, that's an easy one, because we try to lend across all areas of our community. We want businesses to be successful, just to make our community thrive. So, come see us. If you have a concept, if you need something, if you're looking at a new product, whatever you're looking at purchasing real estate, anything you need, that's why we're here. But again, going back to the relationship, you've got to have that relationship with your banker. And the first time we see you, if you have an account with us, the first time we see you or you meet your banker is not when you're in the overdraft. That's not the call that we want to make. So know your banker, have that relationship, be able to call him whenever you need him.
Yeah, and I would say, especially with the room that is probably in here right now, we've all raised money for something, whether it's Education Foundation, golf tournaments, whatever it might be. Our office is way more likely to help those other, whether they're small businesses that are raising money for an employee that was sick or hurt, or a school district that needs funds for their Education Foundation, if you've used us in the past. The clients that frustrate me the most are the ones that ended up going with Rocket Mortgage or Quicken Loans or something, and then the next month come and ask me for $500 for their daughter's cheerleading sponsorship. And we prefer, and that's kind of what our sale is, we're not going to be the cheapest. And I think most local banks would probably be very upfront with that. We have a brick and mortar, we have families we support. We're not just sitting in a cubicle in a high rise somewhere. And so we are going to be a little bit more expensive, either on the rate or maybe on the fees. But in turn, we're going to support the heck out of our community. We gave, I can't tell you how much money and how many, Amy knows this from her past in Waxahachie, but we sponsor everything. If you have a child or your parents have done a mortgage, and even if they haven't, we love to give back to our community. And so that's why I only participate. If I have the option to buy local or to use a local service provider over a big bank or a big service provider, I'll do it every time, because my kids are going to be the ones sending them an email or a text asking for money for their sporting event.
Well, you know, the SBDC, as we work with the local communities, the local businesses, our metrics every year are, you know, how many jobs we create in the community, how much money has been raised by these small businesses, by you folks, that's going, and that money goes back into the community because it's paying those people's salary. So it's driving economic impact by growing a business in a community. And a business loan that allows you to hire those extra 2 people and buy the extra machinery you need for them to operate, to grow and build your products that you're selling, and that revenue is coming back in again. So there's a significant impact, and it's a relationship between the bank and you, the small businesses, and the SBA and the SBC, because as I said, our metrics, we look at jobs created, we look at economic impact, financial funding raised, and our counseling and our support and the research we do for these businesses. How many new businesses are launched? I mean, that's another piece of the equation. So now I'm going to open to questions.
Okay.
You spoke a little bit about veteran loans for homes, which I've taken advantage of in the past. Is there anything like that for businesses, for entrepreneurs, veteran entrepreneurs? Is there any special lending or programs?
The state of Texas, correct me if I'm wrong, I'm federal, but the state of Texas has a special program for veterans. I believe that they have a booth here. I may be wrong, but I do think there was a veterans organization outside, but there were special programs through the state of Texas for veterans. Our loan programs, we can't say, none of them are just specifically for veterans. They do benefit veterans. But I would say check with the state. And also the LIV Fund offers a special rate for veterans, one of them, microlenders. Are you aware of any others?
No.
I can just add, because I'm a veteran too, the VA has a program called Boots to Business.
Yep.
That is phenomenal. So
That is an SBA program, by the way. That's an educational program to get people ready, but it doesn't have, I think he was asking about special loan programs.
Okay.
Maybe I read more into it than was really good.
Yeah.
Thank you for mentioning Boots to Business. And then there's a Reboot program as well, but those are open to also the spouses of the military too. Thanks for taking advantage of it. Are you a graduate of Boots to Business?
no, ma'am.
Okay, well, you're a very smart lady.
Yes, you were talking about relationships with your bankers, and I personally feel like I have a good relationship with my banker, but I also work out of a very small branch where there's only like 2 people and I see the same people. Of course, I haven't had to, but I've talked to them about loans, and they told me that they're very conservative in how they provide them because they are such a small branch. Do you have any suggestions on how to build a relationship with like a medium-sized bank that might have less conservative limitations, and how to build that relationship, because you're probably not going to see the same 2 people at that
Well,
branch?
I think we'd start with, and Linda mentioned this earlier, there's Lender Match. And that's through the SBA, and you can go and match and identify other lenders that can meet the criteria of what you're looking for. And that's probably the best place to start, is with that, and that'll identify, and most of those are the preferred lenders, SBA preferred lenders.
And you're right, it's hard to walk into a branch bank and talk to the commercial lenders. They generally aren't there in the branches, but John can probably tell you how that works internally for your commercial.
For us, I mean, you can walk in. We are a congruent group. We're a team, and we're there every day. We're in the bank every day. We are a branch of a multi-billion-dollar bank, but we are a community bank. I would say look for that community bank, not your Chases. I'm not throwing anybody under the bus, but your Chases and your big banks, your city banks, they're not going to have a local banker, or if they do, that banker's going to change every 6 months. We're there. I've been with Plains Capital. I just celebrated my 15th year. So our bankers are stable. We're here. We know our customers. That we don't close a loan. We're not going to close a loan without meeting our customer. We're going to know who our customers are. So I would just encourage you to walk into a bank and say, hey, I want to meet a lender. And, you know, they're going to introduce you, and we tag team, we team. If I'm not there, they can go with one of our other lenders. You know, even if I'm your servicing officer, you're going to be able to walk in and you're going to get what you need with one of the other lenders the day you walk in. So I would say stay with the community bank, you know, a local bank. Your big banks are just not, they don't operate the same way.
Good. Very good point. I was going to talk about community banks earlier, and I was going to guess that John is with a community bank because you can hear it when he talks. Big difference, and they tend to be smaller banks or regional banks, and they're focused on that community, the communities they serve.
Whenever you guys have talked about a lot of loans, however, is there access to grants? And where can we find the information for that?
We are asked that every day at the SBA, and we have a few grants. They're not for startup, they're not for ongoing operations, they're for exporting and for developing a product that the U.S. government wants to buy but isn't even in the market yet. So for grants, you might look towards state and city, and maybe someone from the state can address that, but it's not going to be the federal government for starting and just ongoing operations for small business.
All federal grants are available through grants.gov.
Sir?
And if you've got the patience to scroll through the thousands of pages, you might find one. There is a search engine with it, so you can't put in some parameters and hunt. But it is a painful process, I'll warn you now. Yes, sir.
Hello, everyone. My name is Jarvis Barone with the Office of the Governor. Linda, you referred to the state twice, and you looked at me, so I thought I had to stand up.
I'm sorry, but I do think of you as the state of Texas, Jarvis. You are the state of Texas to me.
No, I'm Jarvis Brewer, at least. That's what my birth certificate says. But I did want to address two items that were just mentioned, the veteran component. So we do have the Texas Veterans Commission Center right there, which has all of the programs that veterans can benefit, whether it's small business, the education component, even getting back to school. I actually used to GI Bill myself, so if you are a veteran, highly recommend getting in touch with the Texas Veterans Commission. Also here in DFW, we have an organization called the Veteran Business Outreach Center, which is housed out of UTA. So they're in Arlington, not too far away, the VBOC for short. They also help, as their name implies, with any kind of business-specific items that veterans can utilize. So in addition to the TVC, getting in contact with your local Veteran Business Outreach Center. The other thing is the grant component. So I'll agree with what both of you said. We also get approached about grants every single day. In fact, yesterday, I think it was yesterday, I had a very lengthy call just right down this hallway, about 30 minutes, talking to a gentleman about grants. And effectively, I'm going to sum up what I typically say to those who approach about grants. There's really no one out there just going to give you free money to be successful in your business. Unfortunately, I think there's a misbelief that there's an abundance of free money out there, and that's not true. And typically when they do exist, whether it's state level or federal level, it's going to be for a very specific need and for a very specific demographic or industry. For example, those on grants.gov will usually facilitate a relationship between that business and a federal agency, and maybe there's a need in the Department of Defense, the Department of Agriculture. And it's typically not going to be for you to start your business or something that's every day. Another component is that it's going to probably be for a very specific time frame. So it starts today, it closes 2 weeks from now. It starts today, it's open for 6 months. There's a pandemic, and related to that, there may be a grant specific to pandemic relief. Just general day-to-day starting your business, unfortunately those type of grants do not exist. Lastly, I believe, Linda, you mentioned People Fund or LIFT Fund. Those are called CDFIs, which stands for Community Development Financial Institutions. So whether you are a veteran, a minority, a woman-owned business, they do tend to have a initiative to help what we call our distressed or underutilized businesses. Doesn't mean that if you're not one of those protected classes that you cannot utilize People Fund, Lit Fund, or any other CDFI. But in that case, I highly recommend getting in contact with your local CDFI. Sorry, my little plug in Jarvis Shore, not the state of Texas.
That was great. That was absolutely great.
That's great. Back corner over here.
Y'all had kind of mentioned building credit for kids and teenagers. Is there anything for, I would say, middle-aged adults to help build credits that are wanting to start or just started?
Yeah, I can speak to it just on, I have a lot, I've had, and I tell this to my 5th and 6th graders, I've had 60 and 70-year-olds come to my office that have no credit because they've used cash their entire life. I wish I could be in that same situation. It's not a reality for most of us. So the main thing is a lot of, there's some good credit repair stuff out there. A lot of it's not. And so what I tell people, if you've got a relationship with a banker, they can tell you pretty quick. I can look at a credit report very quickly. And if it's zero and you have nothing, you got to go open a secured credit card with a $250 guarantee that's tied to your checking account. And after about 3 to 6 months, you'll have a 680 or 700 credit score. If it's damage that you've done to your credit as a middle-aged adult, depending on what it is, if it's turning in a car or God forbid foreclosing on a home, there could be some time and maybe not even going to happen, honestly. If it's more like a credit card, got turned over or something like that, the longer away from that event, the better. And then there are some ways in which we can run simulators that say, and that's all free, we don't charge for that. Most banks won't. We only get paid when you close on a loan. And so a lot of times I spend probably 60% of my time counseling people on how to get to a credit score that would enable them to qualify for a loan.
Yeah, another quick way to do that is to save up money, save up $2,000 or $3,000, $5,000, come open a CD, do a CD secured loan, and pay that loan back over time, and that will establish your credit as well, along with doing the secured credit card.
Also, the 2 CDFIs that Jarvis mentioned, they actually have grants for themselves to operate to help provide financial counseling, and that's oftentimes the first place that a very small business will go, and especially if they need to build their credit. So they do have programs to help with that.